Welcome to another video of Cambridge Accounting. In today's video, we are going to solve October-November 2020 paper 12 A's and A-level paper. Let's move to the question. Question number 1. The inclusion of unpaid interest on loan interest in financial statement in accordance with accounting concept. When the business include financial interest, the unpaid loan interest in the financial statement, which accounting principle concept? So we can see consistency. Consistency means accounting records should be consistent in nature. So that is wrong. Going concern, continuity in nature, wrong. Yes, third option, matching is the correct answer. Next, what is depreciation? The first option, a means of allocating cost of non-current asset over its useful life. Perfect. That is the allocating of the cost of current asset over the entire useful life. So the correct answer is option A. Next, question number 3. A trader depreciates fixtures and fittings at the rate of 10% on cost means straight line method. On 1st January 2019, a purchase of new fixtures and fittings. What is the price of the item? The price is $5,000 was posted to the advertising account in an error. They are done one error, purchase of the fixed asset, they put as an advertising account. So advertising account, advertising is an expense. So what is the question? The question is, what was the effect of this error? Our question is, what was the effect of this error on the trader's capital account on 31st December? So first we have to calculate 31st December means closing capital. So first we have to know what is closing capital. Closing capital is equal to, this is closing capital. So closing capital is equal to opening plus profit. Opening plus profit. So here the profit is, first we have to check the opening capital plus profit. The effect of profit will change the capital account. So here the question, how it affect the capital account. So first we have to check how it affect the profit. So the here depreciation percentage is 10%. Actually it should be shown in the income statement. 10% of 5,000. 10% of 5,000 is how much? The depreciation is 5,000 into 10 by 100. Actually they should show depreciation 500, but they didn't show. They are, instead of that, the full amount has gone to the advertisement account. Advertisement, the full amount has shown. What is the amount shown? The amount shown is 5,000. Here 5,000 they are added, while by mistake 500 not shown in the income statement, 5,000 added. So this is not done, this is added. So the net effect is, what is the net effect? the net effect is in the income statement 4,500 is more in the expense. It means actually depreciation should be there 500, but by mistake advertisement shown, that means 5,000 overstated expense. That 5,500 we can adjust with the depreciation. So expense is overstated. Expense overstated 4,500. When expense overstate 4,500 means what is the effect? What will happen when expense overstate? Expense overstate, profit will understate. So profit understate amount 4,500. So when profit is understate, what will happen? When profit understated, our capital will understate 4,500. So what is the correct answer? The correct answer is understated 4,500. Option C is the correct answer. Next, question number 4. A company had a non-current asset which cost 3,70,000 is the non-current asset. The asset had over 10 years useful life and an estimated residual value 20,000. A full year's charge depreciation is made every year. So, after 4 years, the asset was sold. After 4 years, the company sold the asset. The loss on disposal was 30,000 and disposal cost were 10,000. So the total disposal loss is 30,000, but it include disposal cost 10,000. So the disposal time actual amount is 30,000 minus 10,000 cost. Disposal loss is actually 20,000 only there in the disposal. So here first we have the question is, what is the question ask? Question is asking what is the sales proceed or selling price. Selling price is equal to depreciation minus loss. The depreciation cost minus depreciation minus loss. So we can check what is the depreciation for 4 years. They are selling the fixed asset after 4 years. So after 4 years, what is the depreciation? First we have to calculate the depreciation. Depreciation is equal to 3,70,000 minus residual value 20,000 divided by what is the how many years? 10 years useful life 10. So 1 year depreciation is 35,000. So how much will be for 4 years depreciation? 4 years depreciation is 1,40,000 is the 4 years depreciation. Now we have to calculate the net book value. Net book value is equal to cost minus depreciation. So net book value is 3,70,000 minus 1,40,000. That is 2,00,000 how much is the amount? 2,30,000 is the amount after we deducted the depreciation from net book value. So we have to find the selling price. If the after deducted the depreciation, if the net book value is 2,30,000, then the net book value minus loss, net book value minus loss is equal to selling price. Selling price. So what is the loss? This loss is included with the disposal cost. So without disposal cost, it is 20,000. So 2,30,000 minus 20,000 is equal to 2,10,000 is the selling price. So the correct option is option D. Next, question number 5. Which item recorded on the debit side of sales ledger control account? Sales ledger control account is the debtors account. Increasing debtors on the debit side, decreasing debtors on the credit side. So let's check the items. Items are interest charged on overdue accounts of customers. If the customers are not paid the interest, then we will add the amount with their owing money. So it will increase the debtors amount. So the correct answer is option A. Next, question number 6. A trader prepared trial balance which did not balance. The difference was posted to suspense account. What is the question? The following have now been found. The errors: return inwards account over cash 90, payment of 200 rent had not been posted to the rent account, but cash is done. What was the opening balance? The question is, what was the opening balance of the suspense account? So first we have to prepare the suspense account. Suspense account. Suspense account, debit side and credit side. The first error 1, return inward. Return inward means sales return. Sales return, sales is always credit, sales return is always debit. The debit side sales return is overcast more than the actual value of 90,000. How to correct the error? So the sales return will be, always sales return is debit side. So if it is overstated means you have to put it on the credit side. So credit side you write sales return. So what will be debit? Debit will be suspense account. Suspense account is debit and sales return is credit. What is the amount? The amount is 90. Here 90, here 90. So here suspend account is debited with 90. So in the debit side 90 sales return. Next, the payment 200 for the rent had not been posted to the rent account. Rent is an expense. So the expense account, rent is an expense. All the expenses are debited. So we have to do the second journal entry. Rent is not ended means we have to do the rent now. Rent 200. So second journal entry, correction entry, rent account debtor 200, credit suspense account 200. So suspense account is credited with 200, rent 200. So what will be the opening balance? Opening balance will be the difference between these two. 200 is on the credit side, 90 is on the debit side. So the difference is coming on the debit side, 110. 110 on the debit side. So debit 110. So the correct option is B, 110. Debit is the correct option. Next, 7. How could a credit entry of 500 in X account have arisen in the books of Y? Y is preparing the books, he is preparing X account. So the journal entry, we don't know X is the customer or supplier, credit customer or credit supplier. So we can check the entry is coming on the credit entry. So we can show here two accounts we can show here. X as a debtor and X as the customer. Customer means debtor and X as debtor, then X as the supplier. Non-paid supplier is called creditor. So let's see how it is coming. There is a credit entry. Credit entry of 500. X bought goods from Y. If X is purchasing goods from Y, it means X is a debtor. If X is a debtor, it will show X is a debtor. So, if an X is purchasing goods, it is the debtor, debit balance will increase. So, if the option A, it will come on the debit side. So, credit entry, no, the first option is wrong. Next, X return goods to Y. If X is a customer, when X is returning goods, when X is selling, it will come on, X is purchasing, it will come on the debit side. X returned, the B option will come here. So the credit entry, the correct answer is X returned goods to Y. Next, an invoice for purchase was credited to purchase account. The credit purchase by mistake, they credited to purchase account. So actually purchase is debit. Here there are two mistakes. How will the balance on purchase account be corrected? Here the mistake is two types. The first mistake is the purchase is not debited. Debit. They are not debited. While what they are done? They have done the credit, they are done. Here, how to correct? The correction, we have to remove this and we have to add this. So, removing credit means you should put it on the debit side. Removing the purchase is not ended. Now, we have to first removing the credit. Removing the credit means we should add on the debit side. Then, we have to again enter the debit. So, 2 times we have to add the debit. So, the correct answer, the decrease in value, not decrease. We have to increase, add. So, first 2 option, no. Increase by the value of invoice, no. Then correct by twice increase the invoice. The correct option is option D. Next, question number 9. Question number 9. Rent is paid by a business monthly in advance on the first day of each month. The payment during financial year were as follows. Up to including 1st June. Until 1st June, they paid, what is the amount they paid? 500 per month. Till 1st June. From July, they are paid 600 per month. Which amount will appear in the financial statement for the year ended 31st October? So, if the account is closing by 31st October means it must be started from November 1st of the last year. So, we have to calculate what is the amount shown on the income statement and statement of financial position. Here, the question doesn't say any amount is prepaid or accrued. So, you have to just calculate what is the amount in the income statement. So, option A and B, first it's wrong. You have to check which option is going to the income statement. Here the question doesn't talk about prepaid or accrued. So, skip A and B. Now, the amount we have to calculate. November to June. November to June, how many months are there? In November to June, November to June, 8 months. 8 into, what is the amount? 500. 8 into 500, 4,000 is until November. Next, we have July to October. How many months? 4 months. But 4 months, what is the amount? 600 into 4. That is coming 2,400. The question is really easy. So the amount 4,000 plus 2,400, 6,400. Correct answer is C. Next, question number 10. What is the effect on profit for the year and net asset when accrued expense are understated? Accrued expense. Accrued expense is the current liability of the business. Accrued expense in income statement. Income statement, we will add accrued expense. In balance sheet, accrued expense, the expense amount is not paid. That is the current liability. It is the current liability. Current liability. So, the question is, if the accrued expense understated. If the expense understated, what will happen with the profit? Profit will be overstated. So the profit will be overstated. Profit is given to as overstated. So we have A and B. Next, net asset. Net asset means, what is net asset? Net asset is equal to current asset minus current liability. So if the liability is understated, the net asset, what will happen to the net asset? Net asset will overstated. So the correct answer is option A. Hope you are clear with today's solution. If you are not subscribed my channel yet, please subscribe and continue watching. Thanks for watching.